This is Brad Barrie, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss the recent market volatility driven by new trade tensions between US and China and why maintaining perspective during these periods is so important for long-term investors. On Friday, October 10th, the S&P 500 dropped 2.7% in a single day, the worst performance since April. However, market sentiment quickly improved, resulting in a bounce back. This may feel like deja vu to some investors. When markets are uncertain, it's important to keep this year's performance in particular in perspective. Over the next few minutes, we'll discuss what caused these market swings and what trends are most important for investors. First, the recent market decline was triggered by escalating tensions between the US and China over rare earth metals. China announced new restrictions on exporting these materials, which led the White House to threaten an additional 100% tariff on Chinese goods. So what exactly are rare earth metals, and why do they matter? These metals are critical components in smartphones, electric vehicles, batteries, military systems, and advanced electronics. What makes them significant is that China controls approximately 70% of global production and nearly 90% of processing capacity. This gives China considerable leverage in trade negotiations. Now, in recent days, the White House has since softened its language, and negotiations appear possible in the coming weeks. This back and forth has been a recurring theme throughout the year, creating uncertainty for investors and businesses. This is part of a broader effort to address the ongoing trade deficit with China and encourage domestic manufacturing. While some progress has been made, supply chains cannot shift overnight, and the results so far have been mixed. For investors, the challenge is knowing whether tariff threats are serious or simply part of negotiations. This uncertainty can lead to rapid shifts in market sentiment, which is why it's important to not overreact to headlines. While market swings are never pleasant, periods of market volatility are often when the greatest investment opportunities emerge. This chart shows the relationship between the VIX index, a measure of stock market volatility, and subsequent one-year returns. Historically, spikes in volatility have often been followed by strong forward returns, since this is when prices and valuations are the most attractive. These are also the times when many investors can become fearful and either stay on the sidelines or sell at inopportune moments. This is yet another reason why true diversification of one's portfolio that is tied to their goals, risk tolerance, and time frame is key. While this year has felt volatile at times, the reality is that market pullbacks are completely normal. Looking at the past 45 years of market history, declines of 5% or more occurred regularly, even during positive years. In fact, despite recent swings, the market has performed remarkably well. The S&P 500 is still up about 31% from its April low and has reached over 30 new all-time highs this year. The key takeaway is not that markets always go up in a straight line. We know that. Instead, it's that periods of uncertainty are both normal and expected, and investors should always be prepared for short-term turbulence. And this should go with any investment, be it stocks, bonds, or alternative strategies. At Dynamic Wealth Group, we believe true diversification should include not just different asset classes, but we go a step further to include different approaches and techniques, along with alternative strategies, to help smooth out the return experience, which is critical for investing success. Now, as I have said many times, it's not about predicting the future. It's about being prepared for a range of possible outcomes, both good and bad. And yes, we all hope for the best, but hope is not a strategy. Speaking of hope, I do hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our white paper. You can click the link below or visit our website at dynamicwg.com or email us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.